The Jewish economy is one of the most fascinating and studied phenomena in world history. For over 2,000 years, Jewish communities have developed a unique economic system that has allowed them to thrive even in the most adverse circumstances. Today, we'll explore the fundamental principles that have made this community one of the most economically successful. The Jewish golden rule in business is simple but powerful. What is hateful to you, do not do to your neighbor. This philosophy transcends simple business transactions and becomes the foundation of all economic relationships. Jewish entrepreneurs build their businesses on mutual trust, understanding that long-term relationships are worth more than short-term profits. The concept of maser, or tithe, is fundamental to understanding the Jewish economy. It is not just about charity, but an economic system that redistributes wealth within the community. Traditionally, 10% of income is allocated to help others, creating a network of economic support that strengthens the entire community. This system ensures that capital is always available for new ventures and to support those facing temporary hardship. Furthermore, education as a priority investment has always been a pillar of the Jewish economy. While other cultures invested primarily in land or physical assets, Jewish communities invested in knowledge. This strategy proved especially valuable when they faced expulsions and persecution, since knowledge is the only thing that cannot be confiscated. Jewish families allocated up to 40% of their income to their children's education, an investment considered more valuable than any property. On the other hand, the Jewish banking system has roots dating back to the 12th century and represents one of the most important financial innovations in history. It all began with the concept of heder iska, a mechanism that allowed for interest-bearing loans that were compatible with Jewish religious law. The Torah forbids charging interest among Jews, but heder iska created a structure where the loan became an investment company. It worked like this. Instead of lending money directly, the lender became a partner with the borrower. The money was considered an investment in the borrower's business, and the profits the lender received were their share of the partnership's profits. This system revolutionized finance because it created a legal and ethical framework for commercial credit. Medieval Jewish bankers developed sophisticated financial instruments that did not exist in any other culture. They created the first bills of exchange, which allowed money to be transferred over long distances without the need to transport physical coins. A merchant in London could deposit money with a Jewish banker and receive a letter allowing him to withdraw the equivalent in Paris or Rome. The Rothschilds are the most famous example of the Jewish banking system in action. During the 18th and 19th centuries, the five Rothschild brothers established banks in five major European cities: London, Paris, Vienna, Naples, and Frankfurt. Their international family network allowed them to move information faster than any government, giving them enormous advantages in trade and finance. Jewish bankers were pioneers in the development of commercial information systems. They created communication networks that allowed them to monitor prices, demands, and opportunities in different markets almost in real time. They used secret codes to protect sensitive information and developed messaging systems that were faster and more reliable than official postal services. The Jewish banking system also developed the first commercial insurance. Jewish merchants who financed caravans and maritime expeditions created systems to distribute risks among multiple investors. If a caravan was attacked or a ship sank, the losses were shared among all participants in the insurance fund. Economic diversification has also always been a key strategy in the Jewish economy. Communities never relied on a single economic activity. If they worked in agriculture, they also had businesses. If they had businesses, they also lent money. If they lent money, they also traded goods. This diversification allowed them to survive economic crises that devastated other communities. Let's now look at the concept of the economic Sabbath, a unique concept that profoundly influences the Jewish business mindset. Every 7 years, according to the tradition of the Shemitah, the land is to be rested and debts canceled. This teaches that the economy must be sustainable and that there must always be room for renewal and financial forgiveness. This 7-year cycle compels Jewish entrepreneurs to plan for the long term and avoid excessive reliance on debt. Jewish trade networks extended throughout the known world long before modern globalization. A Jewish merchant in Spain could do business with another in Poland, Morocco, or even India, utilizing family and community connections. These networks worked because they shared common languages, Hebrew and Aramaic, similar value systems, and dispute resolution mechanisms accepted by the entire community. The economic survival mentality, developed over centuries of persecution, created a unique entrepreneurial culture. Jews learned to be mobile, adaptable, and resilient. Their businesses had to be able to relocate quickly, leading them to specialize in activities such as trade, finance, medicine, and intellectual services. This forced mobility made them adept at transferring capital and knowledge between different regions. Now let's turn to the concept of tikkun olam, or world repair, which profoundly influences modern Jewish economics. Businesses should not only generate profits, but also contribute to the betterment of society. This philosophy has led many Jewish entrepreneurs to invest heavily in social, educational, and technological causes that benefit all of humanity. Furthermore, the expanded concept of tzedakah goes far beyond simple charity. It is a comprehensive economic system that ensures the constant circulation of wealth within the community. The wealthy have a moral and religious obligation to invest in the educational and business development of other community members. This creates a virtuous cycle where individual success contributes to collective success. If you find this video helpful, please give it a like and subscribe to the channel so you don't miss our next content. The culture of debate and discussion in the Jewish tradition translates into concrete business advantages. Studying the Talmud, which involves analyzing arguments from multiple perspectives for hours each day, develops critical thinking skills that are invaluable in business. This ability to see all angles of an issue, anticipate objections, and construct solid arguments is fundamental to negotiation and business decision-making. Jews developed the concept of corporate social responsibility very early on. Jewish businesses traditionally had obligations to their community that went beyond simply paying taxes. They were required to create stable employment, support educational institutions, and care for the less fortunate. This model of socially conscious capitalism was a precursor to many modern business practices, such as the corporate social responsibility of today's companies. An important aspect to highlight is that absolute respect for contracts in Jewish culture significantly reduces the costs of doing business. A pledged word has the same legal and moral value as a document signed before a notary. This culture of trust makes transactions faster and less costly because multiple intermediaries are not required to verify the party's good faith. Urban Jewish communities historically specialized in activities requiring a high density of human capital: banking, luxury goods, medicine, law, education, and later technology and innovation. This concentration in high value-added sectors allowed them to generate greater wealth with fewer physical resources, a strategy that became especially important when they were prohibited from owning land. Generational planning is another distinctive element of the Jewish economy. Families plan not just for the next generation, but for 3 or 4 generations to come. This long-term vision influences all investment, savings, and education decisions. Traditional Jewish families have financial plans that span decades, ensuring that each generation is better prepared than the one before. However, one interesting aspect is that occupational flexibility has always been a defining characteristic of the Jewish economy. Unlike other cultures where professions were inherited from parents to children, Jews changed occupations according to market opportunities and economic needs. This professional adaptability allowed them to take advantage of new economic opportunities much more quickly than in more rigid societies. Practical financial education in Jewish families began at a very early age. Children not only learned theory, but also actively participated in discussions about family budgets, investment decisions, and business risk analysis. This practical education prepared them to become sophisticated business people from an early age. Jewish networking works differently than traditional networking. It's not just social or professional. It's deeply economic and based on long-term mutual obligations. Synagogues, community organizations, and religious celebrations serve as economic exchange centers where business partnerships are formed, investment opportunities are discussed, and critical market information is exchanged. Jewish business ethics established strict rules that created a more trustworthy and efficient business environment. These rules included prohibitions against charging excessive interest rates to members of the same community, cheating on weights and measures, or taking advantage of the ignorance or desperation of others. These ethical standards were not only morally correct, but also created competitive advantages by reducing the costs of oversight and verification. Jews developed sophisticated systems of Hevra Kadisha for business organizations that functioned as community social insurance for entrepreneurs. These systems allowed Jewish merchants to take more entrepreneurial risks, knowing they had community support in case of failure. This safety net fostered innovation and entrepreneurship. The abundance mentality in Jewish economics contrasts with the scarcity mentality of many other cultures. Rather than viewing wealth as a zero-sum game, where one person's success implies another's failure, Jews understand that prosperity can be created and expanded. This mentality leads them to constantly seek business opportunities that benefit multiple parties simultaneously. All of these principles, applied together, have created a sustainable business culture that has endured and thrived for more than 2 millennia, constantly adapting to new circumstances while maintaining its core principles intact. If you found the video helpful, please like and subscribe to the channel so you don't miss out on more content. See you in the next video.